Good morning, welcome to the ADS Securities Markets Update. We'll start today with a look at the latest intervention from the central banks before looking at the Asian session fundamentals in addition to a preview of the day ahead. But first of all, the Reserve Bank of India came in and unexpectedly cuts its benchmark rates. The bank cuts the repurchase agreement, purchase rate towards 7.5% down from 7.75, and the reserve repo rate also towards 6.50 or 6.5 down from 6.75, and leaving the cash ratio or the cash reserve ratio unchanged at 4%. The bank basically is worried about the inflation rate, saying that the disinflation is evolving at a faster pace than the market estimates, or than their estimates at least. And this is despite the fact that the year-over-year CPI in India remains at 5%. However, the wholesale price index in India fell by the most since 2009, declining by minus 0.39% in January, which is the biggest monthly decline since 2009. In addition to that, the WPI, or the wholesale price index for the manufacturing sector, also eased down to 1% in January, down from 1.6 in December of last year, which is also the lowest reading since 2009, declining for 6 months in a row since mid 2014 peak when it was around like 4%. In China, the People's Bank of China also came in and cuts the 7-day repo rate toward 5.5 down from 7%, which shouldn't be surprising given the fact or after the recent intervention this weekend. And as we noted in our previous reports and also analysis, that this would be only the beginning in order to depreciate the Chinese yuan further. Despite these two interventions, the Asian markets or the Asian equities remains lower on the day or so far. The Nikkei 225 is losing around 0.74, and the Hang Seng in addition to that is also lower by 0.17, and finally the Shanghai Composite Index remains lower by almost 0.16% until this report is released. As for the Asian session today, there were also a few economic releases from Australia, Japan and China, which had only a slight impact on the market before the intervention. Beginning with Australia, the AIG Services Index increased again toward 51.7 in February, up from 49.9 in January, which also the highest reading and the first expansion since February of last year. Moreover, the Q4 GDP in Australia came in slightly less than expected, but higher than Q3 of last year, growing by 0.5% in Q4, comparing to 0.4% in Q3, while the estimates again were to grow only by at least 0.7%, matching the Q2 GDP of 2014 or of last year. In Japan, the services PMI also tumbled below the 50 key level again, declining toward in February, contracting toward 48.5, down from 51.3 in January, which is also the first contraction in 3 months and the lowest reading since April of last year. Finally, in China, the HSBC services PMI came in also slightly higher toward 52 in February, up from 51.8 in January, which is the highest reading since December of last year. As for the European session ahead, there are a collection of economic releases across the Euro area countries today, but the main focus will be on the services PMIs for the month of February, and the estimates are quite encouraging today, as we'll be looking for Spain and Italy. In addition, also Spain is likely to rise again to 56.9, up from 56.7. Italian also to rise to 51.8, up from 51.2. We had Eurozone, Germany and France likely to remain stable. And finally, from the UK is also likely to rise again to 57.6, up from 57.2. In addition to the PMIs today, the Eurozone retail sales will be released, and as well, the estimates are quite positive today, or to rise by 0.2% in January, comparing to a rise of 0.3% in December of last year, which basically, if the numbers came in as expected, this would be the fourth monthly increase in a row not seen since 2004 2004. As for the US session, there are also 3 economic releases from the US in addition to the Bank of Canada decision. Beginning with the US, the ADP Non-Farm Employment Change, or the jobs for the private sector, is expected to add around 219,000 in new jobs in February, comparing to 2013 in January. However, a disappointment is also likely given the fact of the contractions that happen in many manufacturing components, such as the manufacturing and the manufacturing sector, also in New York, Chicago, and Texas and other states. In addition to that, also the final services PMI in the US is expected to decline again to 54.8 in February. Down from again 57 in January. And finally, the ISM non-manufacturing PMI is expected to ease back again toward toward 56.5, down from 56.7, which is also like a slight decline during the month of February. In Canada, all eyes will be again on the Bank of Canada decision. The bank is expected to keep the current rate and the current policy unchanged after cutting the rates towards 0.75% in the previous decision or the previous meeting. However, the bank may hint for further easing, given the fact that inflation is slowing down and touch almost 1%, which is the lowest inflation rate since November of 2013. These are, or this is, or there is no technical update, or this is first of all, this is the fundamentals for today, or the fundamentals that we'll be looking for today, and there's no technical updates for today, as we were still waiting for the Kiwi dollar to enter our selling area in our the one that we noted in our previous reports, and moreover, we believe that it's better to stand aside until the US jobs report is released on Friday. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.